Hello, my name is Monika Krupa. I'm international student from Poland, majoring in banking and finances. Today, I would like to analyze Boeing stock, and I will start from the price, which significantly grew over the year from 2017 to 2018, from $155 per share to its highest $445 per share. This growth can tell us that Boeing was doing extremely well, and it was connected with its new Boeing 737 Dreamliner and the fuel-efficient engine. For the analysis, I took closer look at beta for Boeing and its two competitors. Boeing beta is equal to 159, Airbus beta is 121, and Lockheed Martin is 113. The beta is telling us the degree of risk, which is equal 1 for S&P 500. So beta above 1 is considered risky, but it doesn't have to mean nothing bad. The riskier stocks can give us more price appreciation and more opportunities to grow. Another factor that I was looking at was the dividend payment for Boeing and its competitors. Boeing dividend ratio is 684 and the payout ratio is 38.55, while its competitors it's higher. For Airbus is 1.5 and 51.02%, and for Lockheed Martin is 8.8 and 76%. So in this case, the payout ratio not always have to be worse when it's lower, because that means that the company is trying to push the growth process. So they try to invest money to then bring more money in the future. So in the future, they will be stronger company and they will be paying back the dividend. For now, I think that it's very important to mention the last two catastrophes that had place in the period of 6 months within the period. Two of the planes, Boeing 737 MAX 8, have crashed after about 10 minutes, couple of minutes after takeoff. The pilots addressed some technical difficulties, and then the planes disappeared from the radar. So what I want to do is to see if this type of catastrophe events have big influence of stock, and if for big companies as Boeing, should it make the investors think about the investing more or maybe not investing? Is it risky for those companies? Things like that. So, like when we examine Boeing stock going over the years back, we can see that the price fluctuates a lot. There's a lot of huge decreases because of some big news. Like before, the battery in some of the planes didn't work well, so they had to ground the planes. Now they have to ground it again. So as of March 11, there was the huge decrease in the price, about 18%. It was right after the plane crash, so the price dropped to $375. So should investor take advantage of this lower price of the stock? I think yes, because for sure Boeing will grow back its price to to the higher level. And we can analyze why Boeing is such a strong company and why a situation like this wouldn't crash the company. Of course, Boeing is huge, is too big to fail. But what can show that it really is that way? Okay, so when looking at last 10 years of Boeing data, we can see that revenue has increased almost every year. It started from more than 68 billion in 2009 and it grew to more than 101 billion in 2018. Also, the net income grew significantly from more than 1 billion in 2009 to over 10 billion in 2018. Similarly, the cash flow from operation is constantly increasing from more than 5.5 billion in 2009 to more than 15 billion in 2018. For most of the people, when they see company, they can think, yeah, like this growth is normal for each company, but really it is really difficult to keep the constant growth over each year. So only the greatest company can keep it that way. Even when we look at Airbus, we can see more fluctuation. It's not growing constantly. Another important factor that I was looking at is the ratio of the growth of the company. So while analyzing for the future growth rate, the Boeing highest is 27.40%, the low is 16.9%, so would give us the average of 22.12%, what is pretty good ratio. The growth is stable, 22% per year. Next factor that I would like to address is that Boeing has basically almost monopoly in the US market and basically duopoly with Airbus worldwide. What mean in situation like this, especially we can see how the government reacted. Boeing easily got contracts with Pentagon right after the crash. Now they get another big contract with the military, so we can see that government try to keep Boeing on high level. It don't let them go down. And at the same time, like we know, Boeing is one of the biggest companies, so they are prepared for a situation like this. They have money for the crisis situation ready. We can also look at the indicator of the net profit margin. For the last 5 years, Boeing was more than the average in the industry. The average is 6.31 and Boeing had 7%. Another very important factor that may be very appealing to investors is that the return on equity for Boeing for last 5 years grew from 63%, then 82, 599, 2,307 to 3,083%. So it's growing rapidly and looking really good for investors. The only thing about Boeing is the level of debt. The debt to equity ratio is almost 100%, and we can also look at the current ratio, what show us the liquidity of the company. Over last years, it went down from 1.195 in 2014 to 1.076 in 2018. It's still above 1, would mean the company is liquid, but we can see that it started decreasing. So the stock analysts provide that the Boeing is a great company to invest in, especially in times like this when we can take advantage of the huge decrease in price. So yeah, that would be my research of Boeing. Thank you for listening and goodbye. Have a nice day.